So we've got the largest wealth generating macro trend of all time, and it's still in front of us. Yes, the early days were super high returns, but it's still super high returns. So we don't want to fuck this up, right? We want to capture that. Right now, we're probably in the last opportunity to put cash into the market. So if you've got cash or you're waiting, now is the last chance, because after this, we hit the banana zone and everything goes a bit crazy. And then it becomes unbuyable, and your entry levels, if we do have a bear market, then you're below water. You should not be from these levels. So, or not by much anyway. These are good final levels to jam in as much as you can.
Raoul, former Goldman Sachs executive and current CEO of Real Vision, argues that this might be our final chance to invest in Bitcoin and other cryptocurrencies before an exponential price hike. He believes that this surge is inevitable due to the network effects driving crypto adoption. Powell explains that cryptocurrencies follow a growth pattern similar to the internet, where value increases exponentially with user adoption. This aligns with Metcalfe's law, which suggests the value of a network grows with the square of its connected users. While short-term price fluctuations might create a volatile impression, a long-term, logarithmic view reveals a consistent upward trend. This trend suggests that despite current levels, the cryptocurrency market has the potential to reach trillions in value. Now, let's take a look at clips of Raoul as he explains why this is the opportunity of a lifetime. As you watch, give the video a thumbs up to show your support, and don't forget to subscribe to the channel for your daily dose of crypto news. We hope you enjoy.
Stop, you don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
This asset is in a logarithmic uptrend based on a network adoption model, Metcalfe's law. And so all of the highs are higher and all of the lows are higher. And when you put it on a normal scaling, it keeps looking like a bubble and then this. And when you look back on the chart, these little blips versus this, because it's this gigantic trend. So what you start to realize is the drawdowns are a feature and a benefit if you think about them right. Then I would take that cycle, the down cycle, with utter joy and add. Expect to see an 80% drawdown. Maybe it's less this time. Maybe it's more. Solana was down 97% this time. ETH was last time down 97%. And embrace it, because every time you buy those lows, you're going to 10, 20, 50x, depending on what you're buying. So if you've got a long-term time horizon, you will definitely make more money by following that route. Buy the sell-off, embrace it, have cash ready for it. Right now, we're probably in the last opportunity to put cash into the market. So if you've got cash or you're waiting, now is the last chance, because after this, we hit the banana zone and everything goes a bit crazy. And then it becomes unbuyable, and your entry levels, if we do have a bear market, then you're below water. You should not be from these levels. So, or not by much anyway. These are good final levels to jam in as much as you can. Okay. So if you're the long-term person, wait for 2026 and go, yeah, I can't believe I can get more and compound more wealth. Get some cash ready for that and be ready. When everybody's panicking, you be the person to stand up and say, I got money. Because don't forget, nobody has money when you bloody need to. It was hard for me to find money because cash flows have gone down, because the economy's slow, all the other things that you have to deal with. But anyway, okay, that's one route. The other route, a bunch of you say, well, I want to take everything off the table. I don't want to deal with the stress of the down markets. That's fine too, right? We all need to understand our own psychology and our behavior patterns. I can't help you with timing the top. I know that it should be, by my work, sometime in summer to winter of 2025. But when? Well, my liquidity stuff says, well, liquidity should peak in July of 2025. Is that going to be definitely right? I don't know, but directionally it's going to be roughly right, because it'll look like most other cycles. Generally, the cycles have peaked at the end of the year, but could that change? Remember, the last cycle was a weird one, because we had this huge run up, we had a peak, we had a huge sell off, then we had another peak, didn't make much progress, and then it collapsed after that at the end of the year. The 2013 cycle was different. It was a super pump in the end, and 2017 was an accelerated pump. So of the three cycles we've had, the 2021 top was actually a bit of an outlier, but we don't know what the tops are going to look like, is my point. So how are you going to time that? Let's imagine you get out roughly right, within, 10, 20% of the high or whatever. Okay. And let's say you take you've turned $100 into $1,000, and now you're waiting for the bear market. I will guarantee you will not put the same amount back in because you'll be terrified of losing it. And what you'll end up doing is sizing the position much smaller than you would have done. And you play with a negative psychology of, I don't know when to add. And before you know it, you've actually screwed the whole thing up. When if you'd have kept it and added, would have been better. So that's one thing I think most people don't realize is it could be easy to take profits. And like I did in 2017, you don't have regrets, even if it goes up more. The hard thing is actually putting the same amount back in again. It's a real psychological problem. So think that one through. I don't like that way of doing things. I think everybody's trying to be too cute. Here's my suggested path for most people, and maybe something I will do this time myself, is we don't know what the cycle peak is going to look like. We don't quite know when it's going to be. We do know it would be crazy early if it finished this year. Usually the back part of the year after the US election, there's usually a screaming pump into the end of the year.
According to Pal, market downturns are actually great opportunities when it comes to crypto. Because of the near impossibility of perfectly timing the market, Pal suggests a practical approach. He recommends taking some profits towards the end of a market cycle, following a time-based strategy rather than attempting to pinpoint the exact peak. His strategy also involves making sure to have sufficient liquidity to purchase assets when prices are low. In other words, buy low so that you can always ride the massive profits. Now, this is just a small glimpse into Raoul Pal's recent market forecast. Pal shares much more, so let's return to the video to find out what else he's got in store for us.
So my advice is use that in terms of time and not price. And take maybe a third off the table for lifestyle chips. Okay, now you can buy your car or your house if you're lucky or whatever it is, or some extra savings, right? Take some money out of crypto land, put it into fiat world where you live, secure your lifestyle, the things that matter to you. Right, now you've taken all of the pressure off. You've done it via time and not price, which is towards the end of the year, I'm going to take a third off. I don't really care what the price is because it will be up a lot. So I'm just going to take it off. And then now I've de-risked my life so I can now run 2025 more intelligently. So 2025, you can then run with the rest of the money that you've got, the 2/3 remaining. And you can say, okay, I'm going to take some off by about the summer. If I wanted to take more off, maybe you don't, maybe just run the rest because you've now de-risked your lifestyle. That's my favorite approach. But what I would have a tendency to do is if we do get a mega pump, the 2013-17, then take another third off when that happens. If it doesn't and it gets stunted, it doesn't matter. You've taken a third off, you've protected your lifestyle, and then you can then buy some cash with that. If you keep that cash, you can buy the dip, or you use it to, as I said, for your lifestyle chips. But this way, you're now ready for whether it stops early. You don't care because you've taken your money off the table, but you're still in the game, right? That being in the game is the secular trend. That's the most important thing to me. But if it really goes wild, you take a bit more off and you can put it into the lifestyle chips bank. And then you've still got a position. Because if you don't have a position in a secular market, I think you end up making suboptimal choices. So that's how, now you might not say a third, maybe it's 50% for you. It doesn't matter. What I'm trying to give you is an idea of not trying to nail the top, trying to think in terms of time zones and then how much lifestyle chips de-risks your life. Because I think it's too important a trend to fuck this up. So that's the best advice I can give. I will probably do the third off strategy this time around because I've got some lifestyle stuff I want to do. I did not last time, and I was bloody happy with not doing anything but buying the dip. I will absolutely buy the dip in 2026. because this trend is going to keep going. Remember, 2.5 trillion to 10 to 15 trillion. 15 is the pump. The 10 trillion should be normal to 100 trillion. That's the game we're playing here. Let the cyclicality be your friend. Understand that there are seasons that you can use to your advantage. We are transitioning right now, and I'm talking to you. This is Sunday, the 12th of May. I'm recording this. We are just transitioning where we're about to hit crypto summer. And that usually happens June, July of the season cycle. And then it goes bananas. Of course, there will be corrections, and there will be sharp corrections. 30, 40% can happen. But it usually goes up into the banana zone from here. That's when you've got to be careful not to lose your mind and fuck this up doing other things you shouldn't be doing, like putting all your portfolio into meme coins because they're going up the most, because you want to maximize profit. Think of this as a longer term game. You'll make plenty of money if you stay with a secular trend in the big tokens and have a small amount to play in the other stuff. The other thing that I have been doing is I've been taking some of my main bet of Solana and putting it into NFTs, which is another thesis. And this is Xcopy and Beeple, and two artists. I've bought some others, but the two artists where I think that a huge amount of that 100 trillion of wealth will end up being stored in high-end art that stays within crypto land. And I'll talk about that thesis another time. So I've been taking some profits into assets, long-term assets, but really, for me, I'll take a third off and then run the rest. I don't want to mess around with it too much.
What are your thoughts on Raoul Pal's bullish crypto forecast? And how do you handle the emotional challenges of investing, especially during volatile markets? Share your thoughts and keep the conversation going in the comments below. Thanks for watching. Like this video if you enjoyed it, and subscribe for more in-depth discussions on crypto, finance, and beyond. Your engagement helps us bring valuable content to investors worldwide. We'll be back with the latest news on crypto, finance, and technology, so until then, happy investing. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.